Hi everyone, welcome back to the channel. So today's episode will be very interesting as today's stock market has been not doing so well for certain companies. I also added quite a few shares. So without further ado, let us check out the latest for my account. So currently my public account standing is at 8,000 about 8504 Singapore dollars. This is also about the cash portion that I'm putting in. So you can see right here, my P&L for my securities here is about flat. It's quite flat. So let's take a look at the individual companies. I I also added some companies today. So today we'll be breaking down the latest earnings and news impacting major tech and growth stocks, from Microsoft to Palo Alto, one of the two new companies. These are the two new companies, and I'll give some market reactions straight off from the earnings and some of the latest news as well. So first up, let's take a look at Microsoft. Microsoft, as you can see over here, today is a trading day, so currently trading January 29. Microsoft dropped by 11.6% at this moment. It goes as low as $423. You can see here. So the latest update for Microsoft is they they actually beat their earnings, but the stock has a major pullback at this moment. So what they said is that the cloud growth has softened. So their cloud growth softened, which weigh on the sentiment despite despite beating the estimate. So the CEO also highlighted that the AI revenue for Microsoft is already larger than some of the company biggest traditional franchise. So actually, this underline Microsoft pivot towards AI service. So it's actually a good news. So their capex spending came in higher than expected, with significant investment in the data center as well as the GPU and AI infrastructure. So investor are actually watching at how the Azure cloud performs going into 2026 this year, and if the AI monetization can accelerate growth outside of the open AI related backlogs contributions. So you can see that the news is not very welcome by investor. That's why the stock price has dropped 11%. So I did take this opportunity to add some shares for Microsoft. We'll go through their finances maybe in another episode. Today we just take a look at their stock price so that the video will not be too long. Next up, let's take a look at the other company that I've added, ServiceNow. So ServiceNow today, similar as Microsoft, they dropped also by about 11 to 12%. Their latest is their strong AI adoption through ServiceNow AI platform and workflow continue to drive subscription growth. The company also recently integrate OpenAI ChatGPT model to enhance the AI agents and the multi-model experiences in its product. So in their latest quarter, ServiceNow beat revenue and EPS expectation, and they authorized a 5 billion share repurchase program, even as share price slipped. So despite short-term volatility, strong enterprise AI demand and strategic acquisition like Visa and Armis are boosting ServiceNow competitive position. So I do believe their vision for the long term. That's why I've also taken today's opportunity to add a few more shares for this account and for my other accounts. Next, let's take a look at the next one. Meta also reported earnings today. So Meta, good earnings, good response from the investor. They reported earnings that topped estimate and saw its stock jump up. You can see right here to I think about 8-9% towards the start of the day. CEO Mark Zuckerberg announced new AI model coming soon, signaling continued investment in generative AI. The company plans higher 2026 spending than analysts expected, so with strong focus again in the AI development. So they are planning to spend more money. So what happened is from the previous earnings, right? Mark Zuckerberg also spent their capex is also quite high. That's why it caused a drop to around 600 or high 500 ish. So I during that period of time I did took some chance to add a bit of shares. So it go down as low as 580. So I didn't add here, just missed this opportunity. So it went back up today again. So Meta is a share that is going to be a very long term play, like a legendary position for me. I'll just keep it in my portfolio. So there's only two shares in this account. So I do have a few other accounts with Meta shares as well. Next, let's us take a look at the next one. Maybe let's talk about Salesforce CRM. So I do not have Salesforce in this account. Let's take a look at Adobe first. Later we'll go through Salesforce. So I think Adobe and Salesforce, these are the two very undervalued company in my opinion. For Adobe, again has the news has not been good since their all-time high. Way back. I think it's about $700, 638. That's quite a long time ago. So today you can see the curve from the last 5 years. Let's check 5 years. Last 5 years you can see Adobe from $700. It never came back up again. So in last year it still went up to about 633. So hopefully there will be a bounce here. You can see this is a 5-year chart. They have strong fundamental. It's a fundamentally very strong company. Let's take a look at their finances in the next video, man. So I did add shares here. I'm very tempted to add now. I'll just wait a while more and see whether they can come to about 270 mark. Then probably maybe I'll buy another one for this account. So Adobe share price has recently been lagging behind its peers. The same reason is due to the concern of a lot of AI agents and a lot of other software doing the same stuff. Well, this competitive pressure. So the Adobe AI revenue footprint remains smaller compared with peers like Salesforce and ServiceNow. And investors are still watching how it integrates AI into its creative cloud products. So long-term wise, Adobe is still a creative software leader, but near-term performance, investors are still afraid of the AI monetization and the market positioning for now. Right, next one, we take a look at maybe at Palo Alto. So Palo Alto today is not doing well as well. They dropped by about 6.5%. So this is a very strong cybersecurity company, fundamentally very strong as well. So I did take today's chance to add maybe a few shares over my many accounts. So Palo Alto continues to benefit from strong cybersecurity demand with recent share strength following solid earnings. The company has launched a new Prisma S integration with partners like IBM and ServiceNow to address AI-powered threats. So with rising enterprise cyber budget and AI threat vectors expanding, security names like Palo Alto here is increasing its critical pieces of tech portfolio. So key takeaway for today. So I take this chance to add in to buy in some shares of my favorite companies. As you can see today, quite a few tech shares are trading quite low. So this will be the latest updates for my portfolio. And moving forward, if there's time, maybe I can share some of the finances. We take a look at the companies that I'm holding, some of their finances, and and maybe elaborate a little bit more of why I have chosen these companies. Alright, so that's all for today's video, and I'll see you in the next one.